Welcome to Investors Insights, where today's topic is sell in May, not so fast. We've got a lot going on this week, but I want to first start off talking about the old theory on Wall Street called sell in May and go away, where the hypothesis is that equities tend to underperform in the months from May through October, so traders should trade out of equities and wait until later in the fall when the market is historically better. Now, I want to show you historically, that's not a very good strategy. And so as you can see here in this chart, a stay invested strategy since 1990 has tended to outperform the strategy of trying to time the market. While volatility is historically higher in the months of May through October, equities have historically tended to be higher. I also want to highlight a second chart going back to the past 10 years where the market was up 8 of the past 10 years during May through October. So yes, we might see higher volatility in the upcoming months, but historically, it's been a good strategy to keep a diversified strategy invested in the market. But Trey, talk about earnings. A big week last week, saw great things from earnings, and talk about how it'll impact the market going forward.
Yeah, definitely, Bobby. So one of the drivers that may be a reason why not to sell in May is earnings. Bobby talked about how last week was the biggest week for earnings for S&P 500 companies. 40% of those companies reported earnings last week, and they were very strong. The year-over-year growth rate in earnings. Now, again, this is year-over-year. Remember, this time last year, the economy was in the depths of a very, very deep recession. Corporate earnings were down considerably, but we need to see that recovery. And just because of last week's earnings, we see the year-over-year recovery go from 33.9% growth all the way up to 46.3% growth. So the earnings that were reported last week were extremely strong. And now that we have 303 of the 500 largest companies in America have reported earnings, the overall earnings picture is looking very strong. On top of that, revenue, where sales growth is also up 11.6%. So painting a very strong picture of going forward of where the companies look like they're growing and where the strength in the market come from. However, even with such strong earnings, we actually saw the market trade down or flat last week, depending on which indicator you look at. And so why would that be, and is that a good sign? To us, that's a very positive sign because you really want to see earnings be strong. And what that does when the market goes flat or down, that makes the market less and less expensive. And really, it's the pause that refreshes, that potentially could push prices higher moving forward. So you want to see this, what we call consolidation period, where earnings are improving, price to earnings ratios are falling, while the stock market stays flat. So could be setting up for a very strong position going forward from a fundamental standpoint. And I know that that's building a good technical case as well.
Yeah, Adam, talk about technicals. The market's been kind of in a tight trading range here. Talk about technicals.
I appreciate it, Bobby. And yeah, Trey, going back to your point, so we're seeing a lot of good things such as the earnings come into the markets, but for the last 3 weeks, the S&P has closed within 5 points of each other. So we're seeing a very stagnant market as of right now in those terms. Friday's S&P close came in at 4,181. That pushes our new resistance level to 4,220 with a new support level of 4,140. So what's also important to look at that we've been talking about for several weeks is the 50-day moving average. We finally see this push over 4,000. So it's sitting currently at 4,002. And that 50-day moving average is very important to look at because it could very easily become our new floor or ceiling for the markets moving forward.
Yeah, Adam, there's a lot going on. The next 2-3 weeks will be very important for the market in terms of hopefully breaking out of the technicals there. But if you have any questions, please let us know. Call us, email us. We love to hear from you. We hope everyone has a great week. Thanks.